Hey Covesting traders, welcome back to the Crypto Intelligence Portal. My name is Nathan.
And I'm Liz. Today's topic, technical analysis.
The premise of technical analysis is to analyze the price of a cryptocurrency or stock and to determine trends and estimate future price movements. By using a variety of well-known patterns and indicators, it is possible to tell when the price is overextended or low.
Technical analysis is not a magic bullet that will produce 100% winners and massive profits. It is an integral part of developing an edge in trading. It can help avoid buying in during a surge in price or selling in a trough. When combined with fundamental analysis, the probability of your trades being profitable improve significantly.
And in technical analysis, it is assumed that the price already includes consideration of all recent announcements. Operating in this mindset leaves the focus on determining where the price will go next, which brings us to our next point.
Prices almost never trend sideways or move erratically for long periods of time. In short, mid-length, and long-term timeframes, there is usually a clear trend in place that can be followed. One of the key elements in technical analysis is to determine the current direction of the trend, then follow it by using analysis of patterns to enter the market at the best possible price.
All right, let's discuss the types of trends. First, we have uptrends.
As prices begin to climb, an upward trend is established. This does not mean that prices will continue to go straight up. There will be many peaks and troughs within the path of the uptrend. There are also trends within trends, so it is important to check the time frame in which you are placing your trade or investment in. A trade being held for a couple of hours should follow the hourly trend. Double checking the market's overall trend on a larger scale will help to improve overall profitability and success rate. Next, we'll take a look at downtrends.
What goes up must come down. Though it may be brief or long-lasting, it is important to remember not to chase a market downwards in hopes of investing at a really good price. This poor trading strategy is called catching a falling knife, and as the name suggests, it can hurt one's assets. Always ensure that a downward trend has finished before making a purchase. Up next, sideways trends.
When prices aren't trending upwards or downwards, they are trading sideways. This is a period of price consolidation when there is no clear dominance of either buyers or sellers. This can be a good opportunity to increase position if the price has reached a clear bottom. Usually when the market is sideways, it is best to sit on the sidelines and wait for a clear trend to take place.
Next, we'll discuss support and resistance lines. When performing or reading about technical analysis, the terms support and resistance are sure to pop up. These price levels represent areas where the price has either reached a floor and has found support, or a ceiling and has found resistance.
Support lines. Price support points are lows which find support, meaning the price typically bounces off or has trouble going lower than a certain point. This happens because many buyers have buy orders set at this price, or traders actively managing portfolios. These price points can represent good opportunities to buy in, and when or where the price will likely decline.
Resistance lines. Price resistant levels are high points in the price which create ceilings, or levels that the price has trouble moving beyond. These levels can represent good selling points and signify that the price is starting to create a top. Resistance lines can be broken, however, and often the move upwards after breaking resistance can be fairly drastic. This is usually caused because many sellers have sell orders priced at similar levels. Alright everyone, we'll see you back here for the next episode at the Crypto Intelligence Portal.
Thanks for watching.